With $30 billion in AUM, you've joined a mega fund. Mega funds are getting a lot of heat right now. They're raising larger and larger funds. We have names like A16Z, General Catalyst, Thrive, Sequoia, and they're exiting the traditional VC world into a new category that includes PE, credit, fund of funds, secondaries. How do you and how does Lightspeed think about this new environment?
So I think the first thing that comes to mind is I just think the scope of the technology investing industry is getting much, much broader. And it really kind of goes in lockstep with the way that these companies are being built and the resulting opportunity set that investors see out there. And I think what you're seeing with this group of funds that are choosing to go this route is that they believe, having been very close to these entrepreneurs, very close to the industry, that there are some pockets of the market that are just underserved. And I think their ambition lies in wanting to go and fill those pockets of the market with new products, new strategies, maybe larger versions of the same product. And so I think it's just a really exciting time in the industry right now because there's a lot of experiments being run, right? And I think with respect to Lightspeed, the opportunity we see just comes back to what I said about this new shape of company that we haven't seen before in this industry. These companies they're going after much more ambitious opportunities. These companies tend to be much more capital intensive, and they also tend to get much, much bigger when they're successful. And I think if you kind of layer that in the backdrop of all this, it's clear that these companies are going to have a funding requirement that we just haven't seen before. And I think Lightspeed's ambition is to step in and really be a great partner to those companies because we think they can not only become really big, but drive outsized returns for our investors.